If you've wanted to make money in the past decade, the place that you've wanted to be has to do with tech stocks, and that has been even more true in the past year. We had the pandemic that hit, and the stay-at-home stocks, which are mainly the tech-heavy stocks that didn't rely on physical retailers, did really well in 2020. And that's why we had an incredible year for the tech-heavy NASDAQ, which is the index that follows the 50 largest tech stocks. And with companies like Apple, Amazon, Microsoft, Google being up significantly in 2020, tech has been the place to be for the past year. Even though some of the earnings have not gone up the same way, the stock prices have increased significantly. For example, Apple was up 80% last year, but the earnings per share was only up 3%, and revenue was only up 2.5%, but that is a different discussion to have. In 2020, the NASDAQ, which is the tech-heavy index as I mentioned, had a record year returning 44% in 2020, and looking how it's done since 2012, that's a very impressive year and the best it's seen during that period. But so far in 2020, the NASDAQ has not been the top index when it comes to overall returns. And so if tech stocks are out so far in 2021, what is the new leader, and is there a way to capitalize on that and have the type of success that we saw with the NASDAQ in 2020 with this new index in 2021? The stock market has seen a fantastic recovery from the volatility that we saw at the start of the year. It resulted in last week being the best week on the stock market since early November. So we've had a very nice bounce back after the incredible chop for the first couple weeks of January. We saw the Dow Jones jump 3.9%, the S&P 500 up 4.7%, and the NASDAQ was up 6%. Those are all incredible weeks, and it's hard to kind of see those gains and be like, oh yeah, something probably did better. But an under-discussed index is the Russell 2000, and that was up 7.7% during that week. The Russell 2000 has been the top performing index in 2021, being up 17%, compared to the NASDAQ that's only up 7.7%, the S&P 500 that's up 5%, and the Dow Jones only being up 3.8%. So far, the Russell 2000 is outperforming every major indice so far in 2021. A tweet I saw said that 1/3 of Russell 2000 stocks are up 20% this year, and that's more than there was for the entirety of 2020. So a lot of these stocks in the Russell 2000 are up significantly, which is not something that we've seen in 2020. So what the heck is the Russell 2000, and why is it doubling the NASDAQ so far in returns in 2021? Because for most people that haven't been around the stock market for very long, the indices that you think of the NASDAQ, the Dow, and the S&P. But the Russell 2000 is this underappreciated index that, for the most part, usually underperforms the overall market. But during certain scenarios, like what we're seeing right now, it has been a top performer. And we've seen this in the past, so we're going to be talking about that. So when you think of the stock market, you think of the large caps and the small caps, which is kind of how I think of it. The general definition for a large cap is a stock that has a market cap of over $10 billion. And then there's the mid caps, which are $2 to $10 billion. And then you have the small caps, which are a market cap of $300 million to $2 billion. So when you think of the most common stocks to talk about for maybe the safer investor, you think of stuff like Microsoft, Apple. These all have market caps in the trillions of dollars. So these are the ultra mega huge market cap stocks. But the ones we don't talk about as much are the smaller cap stocks. And when I looked at my overall portfolio, I was wanting to answer the question, do I own any small cap stocks? And the only stock that I could think of that might be in there with Zynga would be ticker symbol ZNGA. And it turns out it has a market cap of $12 billion, meaning that it is still a large cap stock, even though it's on the lower end of the range. So I don't own any small cap stocks in my portfolio. Does this mean that small cap stocks are a bad place to invest? It depends. There's a lot of risk involved, but as I've shown so far in 2021, the small cap stocks have been the top performing index. And that begs the question, would I ever consider buying individual small cap stocks? The short answer is no. The long answer is it's complicated. The reason I say that is if you've been on the channel for any part of the past year, I always talk about I don't like investing in industries that I don't fully understand, or specifically picking individual stocks. We talk about stuff like pharmaceuticals, biohealth, even the weed stocks. I usually prefer to go with something like an ETF that follows the overall market so that I can get the benefits of the overall sector going up, but I don't have to worry about picking a dud from the overall market that I don't fully understand. So historically, small cap stocks have outperformed places like the S&P 500. Does that mean that they're a safer place to invest in somewhere like the S&P 500? No. And there's a pretty simple explanation of why. What's the most amount of value that a stock can lose? It's 100%. But the upside is definitely higher than 100%. So when you have an index that has 2,000 individual stocks, yes, you're going to have plenty of stocks that fail and do absolutely horrible. But then you're going to have ones that are going to be outperforming the overall stock market significantly. And since you have a higher upside potential, it's going to have a total return that's usually going to be outperforming the averages. So when you have something like a stock that has infinite upside potential, you really have to look at how the numbers are being skewed, because if you have a stock that's down 100% and then you have a stock that's up 1,000%, if you average them out, it's going to look like on average the stocks went up a bunch. But in reality, you have one that went up a lot, one that went down and lost 100% of its value. So is it safer to buy these individual stocks? No. The reason that you have this outperformance is because you have stocks that can do really well, and then you have a cap for how poorly the stocks can do. So Russell 2000 stocks are more volatile than the normal stocks that you'd find on the stock market. And one of the problems that I have with individual stocks as well is I only like buying into stocks that I can find significant information about, because I think the more information you can find on a stock, and in addition, the more information that other people are willing to talk about that stock, makes you a lot more confident for buying for a long-term potential. If I find a stock that I really like, but I can't find anyone online talking about it, that's usually a pretty big red flag for me. I want to be able to just type in the ticker symbol on Google and come up with articles that talk about the recent earnings reports, the outlook for the upcoming year, and just have a discussion about what's going on. With a lot of these Russell 2000 stocks, you're not going to be finding the amount of articles that I would prefer to find for a large cap stock. So that's one of the other reasons why I wouldn't really consider buying a small cap stock specifically. But that doesn't mean that they shouldn't be a part of your portfolio. Just like with my views on the cannabis industry, I think an ETF is the best way to invest in a super volatile type of market. Maybe you watched my video last week where I talked about the solar industry and why I talked about how I really liked Enphase Energy, ticker symbol ENPH. That's up 11,000% in the past 5 years, which is crazy. Does it have a lot of risk? Yeah, it absolutely does. So I could consider investing into a solar ETF, which is the ticker symbol TAN. It allows you to capitalize on the upside potential of the industry, but doesn't have as much of a risk because, as I always talk about with the law of large numbers, when you have more numbers, it makes it so that the resulting number is closer to the actual mean. Because say you pick one specific stock from the solar industry, you can get the top one, you can get the bottom one. But if you get 100 of the solar stocks, it's going to average out closer to what the actual mean should be. That's why I've talked about why the ARK ETFs are so great, because they have a variety of stocks that benefit from them increasing in value, but they have enough variety where they don't get weighed down by a specific loser that's underperforming compared to the overall market. And that's what you have with ARKK, which is their just general innovation ETF. When I show their top 10 holdings, what do you notice? The largest weighting ones have had an incredible 2020. Tesla was up 743% in 2020, Roku was up 148, Teladoc was up 140, and Square was up 250%. So you can still have incredible returns with ETFs. It's usually the problem of when you find these normal ETFs, there's so many stocks involved in them that it's not going to have, a 100% return. But with the Russell 2000, where you're trying to capture these whole market of small cap stocks, I don't think you're trying to invest in something that's going to double in a year. You're trying to have more exposure to an industry that maybe you had pretty much zero exposure to in the past. So if I was considering buying into an ETF that follows the Russell 2000, in my mind, I can only think of two decent picks to pick from. And it really depends on if you have a preference in the company that runs these ETFs, because I'll put these two ETFs side by side. They follow the market specifically. It's not like you have to pick one to have a guess of which one's going to outperform the other. They're pretty much going to follow the market specifically. So the first one is the iShares Russell 2000 ETF, which is the ticker symbol IWM. And then the other one I would consider buying, which is the Vanguard ETF, which is VTWO. So if you have a preference between iShares or Vanguard, that's how I would decide. I really don't care. I'd probably just flip a coin because it doesn't matter too much to me. But overall, I think the Russell 2000 is a very interesting place to consider investing going into 2021. For the past decade, the tech stocks have been the leaders in the overall market. And then with 2020 going into the pandemic, the stay-at-home stocks and specifically the tech stocks did incredibly well. Are we going to be seeing a changing of the guard where tech stocks are no longer the market leaders? Probably not. But I think the Russell 2000 is an underappreciated place to invest in the overall stock market. These are not household names that you can, talk to your friends about or find a lot of information. But if you allow yourself to invest into an ETF that follows these 2,000 stocks, because of the law of large numbers, on average, you're not going to be putting yourself to as much risk as picking one of these specific stocks, because as I mentioned, you could pick the loser of the 2,000 stocks, but if you're averaging out the 2,000s, on average, they have outperformed the S&P 500. So I think the Russell 2000 is an interesting way to consider investing in the stock market and something I'm considering at this point, but I just think that seeing the trend of the NASDAQ not being the top performing index is very interesting to watch, and I think it's going to be unlikely that the NASDAQ is going to be lagging the Russell 2000 for the entirety of 2021, but at this point, that's the story that we've seen in the overall stock market. And while part of investing is looking forward, part of it's looking back, I think it's always interesting to see these changes in how the overall stock market is working, because NASDAQ's been the top dog for a while, and quietly the Russell 2000 has come in and been the top performing indice for 2021, and it's double the NASDAQ at this point. So let me know if you'd ever consider buying an individual stock from the Russell 2000, and let me know if you would consider buying a Russell 2000 ETF, because I think it's a very interesting way to invest in the overall stock market. Thanks for watching. Hope you guys have a great day, and I will see you in the next video.